Hi guys, a very good morning to all here joining us live on this broadcast on Moneycontrol. You're watching Opening Bell and I'm Stacy Pereira. Let me quickly give you a recap of what went down in trade yesterday. Well, we did see benchmark equity indices almost close at that fresh record high levels. Nifty settling in at that 23,399, but it did touch that 23,450 odd levels as well intraday, and also closing at that all-time high again. Third time we would say in 4 sessions. But you also had the Sensex finishing at an all-time high. 76,811 is where the Sensex closed. So it was a Nifty, Sensex, even the Midcap index, all of them that were trading in all fresh time highs, in fact, for all 3 of these indices. And we're going to see whether we manage to get past those resistance levels and look at newer highs. Of course, this week has been quite good for the benchmark indices. So whether we close at those good levels of gains for both, this is what we're going to be seeing. But before all of that, we also have all the international news that is flowing in. So let me take you through all the top headlines. Now, the S&P 500 and the NASDAQ has hit a record high for the 4th straight session as wholesale inflation ticks lower in May against the expectation of a rise in prices. Stocks in the Asia-Pacific region are trading mixed ahead of the Bank of Japan's policy decision. The GIFT Nifty is suggesting a muted to a flatter start for the Indian markets. Crude remains range-bound. Brent continues to trade around that $82 a barrel despite a surprise build-up in U.S. inventories. Gold prices hover around that $2,300 an ounce. Adani-owned Ambuja Cement will acquire 100% stake in Penna Cement at an enterprise value of more than 10,400 crore rupees. The deal gives Adani significant footprint in western and southern India. This is the second major acquisition after Sanghi Industries since its entering the cement business 2 years ago. And internationally, the G7 countries has reached an agreement to mobilize about $50 billion for aid towards Ukraine from seizing its Russian assets. The US and the Ukraine also signed a 10-year bilateral securities agreement at the summit. Just about 9 minutes to go and we'll know where markets are taking us today, whether we're going to see newer highs or not. But let's track a couple of F&O cues before that you could watch out of what that's really telling us where markets are headed for, the coming weeks at least. We do have the Nifty call option data, which is showing us that 23,500 strike continues to be the one with the maximum open interest. This time 2.10 crore combined open interest is on the maximum call interest that we are seeing for this particular 23,500 strike. Whereas on the put side, it is gone down to 23,000 strike, which is seeing the maximum open interest about 72 lakh open, combined open interest contracts that were seen for that. So if you look at the put call ratio, then it pretty much is in that same unchanged zone. We could say 1.01. Yesterday it was 1.02, but it means that we are still surpassing those 1 levels, which indicates a bullish sentiment, we would say. In terms of stocks in your F&O ban, well, they continue to be in the ban is Hindustan Copper, India Cement, GMR Infra, as well as SAIL. The new entry into this ban is Sun TV, and this after the stock has seen quite some bit of action in the past few days in the week. After the elections, we saw some good rallying. Post DMK came to got a good majority of seats in Tamil Nadu, and after that we're seeing some more action where there is profit booking there in Sun TV. We'll discuss that in detail. But when you look at the trade setup and where really the monies are coming in from, well, FIIs did go on to sell about 3,033 crore worth of shares on June 13th, whereas the DIIs also were sellers in yesterday's trade, about 553 crore worth of equities that the DIIs too sold in yesterday's session. If you look at the India volatility index or the fear gauge, that one has cooled down considerably, we would say. down by about 6.26%. From that 14.38 that it was yesterday, it has further reduced to 13.48. So quite good there coming in for the India Volatility Index, at least now that we have most of the domestic events out of the way. But let's get discussing and understand where exactly, how should we be trading in these current high levels. And joining me for that is Raja Venkatraman. He's a co-founder at NeoTraders. Good morning, Raja. Always a pleasure to have you with us here. Now, we've seen the Nifty and what it has been doing in the last 4 sessions, at least quite range bound, we would say, indicating rather maybe a pause before we see that next move up. Is that the direction that we could see, or is there still that wait for what really is going to be that trigger for the Nifty or for the market in general to be taking it forward from here? At least not before that breakout. Do you think that that's what we're going to see, or do you think we are going to be able to sustain in those 23,350 levels?
Yeah, good morning, Stacy. So the entire market has continued to remain a little uncertain, and yes, the last week the uncertainty was the election results, and now the uncertainty pointer has now moved towards a rate cut. Well, RBI has kept the rate cut unchanged. The Fed also has kept the rate cut unchanged. So there again hovers a bit of uncertainty about whether it's going to happen or not. But then, with that being the case, the positive signs are emerging from the government, which has been formed for the third term, the ministries that have been retained, and that's why you're seeing that all the stocks that did well before the election have once again started on the upward trajectory. Yes, at such heights, uncertainty is bound to creep in. But then, what I continue to believe is one should hold on and trade what one sees rather than what one fears. Because at the current moment, if you go on the street and ask, people are still afraid for a similar reaction which occurred on the election day. Now coming to the levels, we like you rightly mentioned, the option data is clearly hinting that the lower levels are sealed at the moment. 23,500 will continue to act as a support. 47,500 on the Nifty will continue to act as a support, and we can see upward levels of a retest of the election highs towards 23,800 to 24,000 are some levels which I'm expecting in Nifty. Well, that's something which one wants, but we got to play by what is happening. The second is on Bank Nifty, nudge towards 52,000 is on the cards. Now, as indices are thinking about what needs to be done in the last 4 sessions, what has really happened is that the market has played quite well, the stocks especially. So this entire market is a stock-driven market. So one should actually focus on the stocks rather than the indices, because the focus right now is quite active participation, and at lower levels, as the data also pointed out, and it's also there in the open, that the retail participants use the dips to buy into. So it's a buy and dip market. Keep booking profits, but do not stay away. That is my message, because the market is giving us a lot of opportunities, and one should ensure that we are able to encash them. Keep booking profits. Again, look at good quality stocks. There are a lot of good quality stocks out there. The Q4 numbers were quite decent, and the stocks which are resonating with the results and are doing well should definitely be on everyone's radar. There are a lot of opportunities there, so that's how one should be trading the market. I am on the bullish side. Now, looking at the future, the immediate future, we have the budget coming up. So I don't expect the market to have a runaway move. There is uncertainty till the budget forms, and after that, I expect that the market could witness more bullishness. But then that's some call which we will take in the upcoming sessions.
The biggest takeaway I think for everyone is do stay invested, because there are pretty much a lot of opportunities that one could get, and of course the every dip could be an opportunity or a buying way to look at it. So that could be a good strategy to look on. Raja, do wait on with us. Let's address a couple of stocks that will be in focus today. Now we're looking at the banking sector, and Raja was also mentioning about how the Bank Nifty has been trading of late pretty sideways, but as managed to get onto that 50,000 levels. But there's a brokerage note that has come out from CLSA on banks, where they say that private sector banks are currently those market laggards, and that's what we've been seeing in trade. Even if we just look at the past two sessions, ICICI Bank, Axis Bank, both of them have seen some bit of pressure when it comes to how they've been performing, but they say that they should give better returns from now on, is at least what CLSA is expecting. They say the private banks have good business outlooks as well as are inexpensive in terms of their valuations. They're trading somewhere around 10 to 15 times the PE versus the Nifty 50, which is at about 18 times PE. So that's the comparison they're making between the private banks versus the Nifty. But the key, they do say that there is a short-term risk, which could be if there is a sharp repo rate cut, which we are anticipating might not come anytime soon, but that could then, if that does happen, then it would reverse the NIMs improvement that banks have been delivering so far. But they continue to like their best preference from the private bank space is something like an ICICI Bank. Let me go back. There's also a brokerage note. Nomura is really liking Axis Bank. Raja, from the banking space, do you think there is enough and more room to enter in terms of valuations? Also, we've seen quite a good rally up before the elections as well from the PSU banking lot. How do you put your weightage when it comes to PSU versus private, and is there enough reason to be looking at private banks even now?
See, every sector which was lagging behind has started showing some promise. So if you take the chemical space has started rallying. So similarly, the banking space also would rally, and we are waiting for some triggers at the moment. And in the banking space, I would definitely wager my bet on the PSU banks, because the PSU banks have been performing well and they continue to outperform the private peers. So I would continue to advocate an SBI or a Can Bank. SBI moved quite well ahead of the election results, and the dip which has come in SBI is a very good opportunity for those who are looking for a short-term investment or those who are looking to trade. SBI would be the first bet, and then Can Bank would be the second bet. So I would put my money on the PSU rather than private. And the question which you asked, whether there is room for more upside, answer is yes, because we have not yet seen the banking perform.
Right, so banks have been that laggard, but we are seeing some bit of, there are pockets that still have good value in there, and Raja's preferring the PSUs compared to the private. But let's address market open quickly there for you. We are opening about those 23,400 levels. So newer highs we could say again, because we were somewhere around 23,415 yesterday that we managed to touch, but there we are above that. So we are at an opening high once again, whereas for the Sensex we are at 76,900. Yesterday at one point we did even touch that 77,000 mark. So the Sensex also rather flat we would say, but just about 0.1% gain coming in there for the Sensex, whereas the broader indices, those ones have also looking quite positive at this point. The Midcap index has seen like 4 straight sessions of higher highs we would say. So the Midcap as well as the small cap index, both of them seeing some good gains at opening bell. The small cap index has almost 0.4% of gains coming in there for the BSE small cap index. Your bank Nifty also rather flat we would say, trying to get on to those 50,000 levels once again, but just about 30-40 points that it is looking at this point. So the bank Nifty trading rather flat currently, but the other benchmarks at least have seen a good positive open, even though the gift Nifty was indicating a rather slower start for the Indian markets. We've managed to get some bit of good momentum. Let's look at what are the contributors towards this and who's really showing us where the gains are coming in for today's session. Well, on your screens you will see the gainers and losers in just a jiffy. There you have it. You have the likes of a Shriram Finance, you have Hindalco and Britannia. So quite a good mix from the NBFC as well as FMCG space. You have Power Grid, Titan, after seeing whole host of profit booking after those brokerage notes that had come out. Titan making it to the gainers list, as well as M&M there, from the auto pack among your gainers. You also have Bharti Airtel, HDFC Life and Tata Motors. So, the auto pack also making its presence felt among your gainers. players. Let's also look at the flip side and where we could see pressure building up. You have the likes of a Bajaj Auto, NTPC, LTI Mindtree. Now remember, NTPC, LTI Mindtree, in fact most of these have also been among your top gainers in this last week, at one point. So now you're perhaps seeing some profit booking creeping into these stocks. So Bajaj Auto, NTPC, LTI Mindtree among your laggards in trade. But quite interesting to see, where really, if you want to pinpoint and see where markets are headed, you might not really get that one particular sector. In fact, let me bring on board Anshul Saigal as well. He's a market expert and he'll probably help us understand what we're really getting the feels from the market. Because if you have to just look at, the last 1 week, we did see FMCG really stand out when, at least on June 4th, when everyone was, trying to save their money from the PSUs, you did see FMCG stand out. But in yesterday's session, if you have to go by that, you're seeing that profit booking take place even among the HULs and Nestle and the likes. How is one supposed to be treading this space? Because, at one point we said, okay, yeah, you look at the defenses because you might still find, you might not lose that much of money. Would you still go ahead with that kind of narrative as well?
Good morning. Thanks for having me. So you're right. This is a time when there is significant market move which has happened in the last 1.5 years, and it makes sense for someone to be cautious at this time. I would say that portfolio managers who have diversified portfolios have every reason to be cautious at this time, because it's unlikely that from 23,400 Nifty will do significant upsides from here. On FY25 numbers, Nifty is trading over 20 times price to earnings. However, if you go a little deeper into the index, lower than the index, go into the small caps, mid cap space, and do a little bit of work, listen to their con calls, listen to what managements are speaking, meet with them, what you will realize, as I do, that there is significant tailwinds in demand, particularly in the manufacturing and capital goods space, because capacity is getting created in this country after a hiatus of nearly 10 years. Now, when this happens, it becomes a virtuous cycle where, because capacity is being created, jobs are created, jobs get created, salaries come to these people, they start spending, and so even consumption income starts picking up. Now, we may be somewhere in the early stages of this cycle, and even if we look at the profit by GDP of corporate India, we are far below the all-time highs, which we hit sometime in 2008. And bear in mind, since then till date, our corporate taxes have come up, so which means that our profit by GDP is likely to be even higher than the previous peaks. So, given that situation, I would say that, like you rightly mentioned in the previous section, that this is not a time to be taking monies off the table. It is a time to just stay invested in the markets. Of course, markets, because they run up so much, they make you anxious. But it's a time to just stay invested, hold your horses. Putting new monies, of course, you have to be cautious. But existing monies which are there in the markets, just stay invested. And in the broader markets, there will be a lot of money to be made in individual opportunities. For that reason, I say that this is a market for individual investors, much more than it is a market for portfolio investors, because in individual opportunities, you will get money-making opportunities rather than the broader markets as a whole.
Right. Quite interesting there, your thought, but just hold on. Let me also address a big news that is coming in, that is from Ambuja Cement. And like we mentioned, they are looking to acquire about 100% stake in Penna Cement Industries for about 10,422 crore rupees. Remember, Penna Cement Industries has a capacity of somewhere around 14 million tons per annum. So that's it's going to be quite an value add for Ambuja Cement. Now, Now Morgan Stanley has kept an equal weight on the counter with 665 rupees per share as their target price. They do acknowledge the fact that this new agreement will go on to add capacity for Ambuja cement. Right now PCIL, the Penna cement's capacity is somewhere around 10 million tons in Andhra Pradesh as well as Telangana, and they're looking to add another 4 million tons, and this could be completed in the next 6 to 12 months. So all in all, a positive for the industry, as it also goes on to reduce the risk of excess organic supply in the medium term is what they are saying. They also, it increases Ambuja Cement's footprint in the south. Now Jefferies also too has a buy call on Ambuja. They'll have a target price of 735. They have acknowledge the fact that this it looks attractive from the EV per ton of about $80 to $90 per ton, including the expanded capacity whenever that comes into place. And the acquisition is a move, it makes them into the top 3 players within the southern market as well. So they are acknowledging that, and you're seeing that counter there on your screens, also seeing some good gains. They're about 2% coming in. So brokerages seem mixed to positive, we would say, on Ambuja Cement. But let's ask Anshul once again on the cement space. We've been seeing quite a bit of action happen there. There was Ultratech that came a couple of days ago with another kind of acquisition, and they spoke about increasing capacity. You just mentioned that we are going to see that happen now with the new government take place. We are going to see the private capex also show that kind of momentum. How are you looking at the cement space, and are there any pockets that you see or particular stocks that look quite interesting to you?
So in the cement space, there is a peculiar trend which is playing out, which is that the larger players, they want to gain further muscle at the expense of the smaller players. So to gain volumes, there is price decline which is happening in the market as a whole. And because the larger players are in that phase where the general accepted structure of the industry is taking a challenge, it looks like this space is going to see some headwinds going forward. I'm saying the broader cement space as regards the pricing of their product. Of course, the larger players will be beneficiaries because they will be gaining volumes at the expense of some of the smaller players. And this should happen across the country. It's not something that will be region specific, it will be country specific. So I think that this 1 year, the coming year, is not going to be too easy for the cement space as a whole. Of course, volume growth will happen. There is slight overcapacity in the market. And on top of it, as I mentioned, the larger players are squeezing the smaller ones for volumes. And that will have an impact on the space as a whole.
Right. Anshul, do wait on. Let me get a couple of queries answered, because our viewers like to have them addressed by our guests, in fact. So I'm going to ask Raja to come in here, and let's help out Adit Taneja. He wants to know your view on NBCC. What would you suggest him, or rather, what are the charts looking at for this particular counter, NBCC?
Yeah, this stock showed some brief upside when the housing queues were announced by the government, and after that the stock is currently witnessing some profit booking. So I would wait for a dip towards the region of around 140 levels for us to buy into. So if you are currently holding this stock, then you can continue to hold on. Overall prospects remain encouraging. You can expect a target towards 170 within the next 3 months. So use dips to buy into because the overall momentum is positive.
Overall momentum is positive. Look for dips to buy into NBCC. Another query quickly. Varsha Gajjar wants to know your view on Titan, and we've seen quite a bit of interesting moves for that particular counter. I think yesterday or day before it was down and about. Today it is among your top gainers. So what is Titan looking at, and what is the news flow around it that is giving it this kind of swings?
Yeah, Titan had a sharp fall, and it's trying to recover at the moment. And FMCG as a whole, everyone thought that FMCG could save the day on the election results. Yes, it was in action, and right now FMCG continues to be a laggard. So going full invested in FMCG would not be the right strategy at the moment. When the sector comes into play, we can look at it. Currently, Titan is good as a trading bet rather than an investing bet. So I would look to hold on and wait for say a short-term investment or a long-term investment into Titan at the moment. But I would definitely consider it as a trading bet.
Right, so Titan looks more like a trading bet, and hold it for the long term if you do have something like that. Anshul, quickly to you, we've been seeing quite a bit of action even among the capital goods space, because whenever summer hits, we do talk about how there have been some very good AC sales at the likes. Yesterday, Whirlpool was at a 52-week high. This after they have announced that tie-up with HUL when it comes to Surf Excel marketing. But all in all, capital goods at this point, do you still see, more white goods rather? Do you still see the likes of, the Blue Star and the others having value at this point, and would you still bet behind them?
White goods as a whole, there will be, it's a very large space and there are various segments in that space. And the beauty of this space is that there are pockets which will become, sort of fully valued at times. There will be other pockets which will still have steam left in them. And so you've got to pick your pockets within the white goods space. And I think that this is a multi-year story. We are, if you're investing for the next 3 months, 6 months, of course, there will be overvaluation. But in certain pockets, that is. But if you're investing for the next 3-5 years, AC sales, washing machine sales, toaster sales, kitchenware sales, we are only scraping the surface. The upsides in those can be so significant that holding these stocks for the next 3-5 years makes much more sense than to be trading them. As I said, there will be pockets always where there will be overvaluation, but overall, this is a very interesting space.
Right. What I meant was the white goods space, but I'm also looking at the capital goods, power, and the likes of, and ABB, BEL, because we've been seeing a good momentum come in even for those stocks as well. But is there a shift taking place now, especially when we're getting into another budget that we have to look forward to? Do you think that the PSUs or the likes, when it comes to these companies, do they still have that capex theme will still play out?
Let me give you a metric. When we in the last capex cycle peaked out, our gross fixed capital formation was as high as 35%. Now it bottomed out at 27% sometime in 2020. And from there, it has obviously reversed, and we are hitting 29.5% today. If we are to go back to the previous highs, you know how much room there is left for that trend to play out. And in our judgment, there is significant tailwinds on capacity creation in the country. And again, this trend has only just started. This decade will be the decade of manufacturing and capital goods. And so capital goods space as a whole is highly attractive. Of course, some of those companies that you mentioned are fully valued. But if you look beneath the surface, there are many companies which will play this space very well over the next 5-7 years. And those are not expensive in valuations. So I would say that this is a very attractive space to be invested in. If you are already invested, stay invested. If you are not, look for opportunities in this space.
Right. And if I have to quickly ask you your top sectoral bets for FY25, we're looking at a longer perspective. So do you still think the banks and the financials have a chance to shine even though they haven't been so far? Or where would you want to be placing your bets, and which sectors?
Financials will do very well. I think that in this year, again, financials should start picking up. They've consolidated for a period of time, particularly the PSUs. Even in private sector banks, we believe that they're close to a breakout in that space. Private sector banks also should do well. There are select NBFCs, particularly in the home finance space, which are looking very interesting. We think that space should do quite well going forward. I spoke about capital goods and manufacturing. I think that is a multi-year story, and again, we are only at the start of that story. That space should do well. Pockets of defense, those will do well. Of course, consumption certain pockets again in consumption, those will do well. White goods. So across the board, I find opportunity. In general, of course, if you look at the headline number, markets look expensive.
Yeah.
But as I mentioned, go beneath that, and there are many opportunities which will make you money in the current year.
Right. So be more stock specific. There are opportunities out there. While let me thank Anshul Saigal for giving us his time and speaking with us this morning. Thank you so much for sharing your perspective on the markets. Well, let me quickly go back to Raja then, who's been waiting by very patiently. Raja, let's get a couple of more queries answered because viewers like them, have them, at least give them some perspective of what the charts are saying. Let me quickly get you one from there is your view. K Naga wants to know your view on Naveen Fluorine. How is that particular counter looking?
Yeah, exactly. This particular counter is what I'm recommending for a buy today. So, well, your leader definitely hit the nail on the on my trade recommendation. So, the stock has bottomed out and it's showing some good traction. Like I mentioned earlier, the chemical sector is definitely showing some positive traction, and I expect a move towards 3900. So, it's a good say a multi-day play here, and one should be looking to buy into this stock right now, because this stock definitely moves quite well and also preferred amongst the trading candidates. So it's a good trading bet, and I would say that it's a good buy, and it's also a recommendation for the day from my side.
Right. So that was also Raja's pick. So I hope that answers your question. Raja, also let's I was just talking to Anshul about the capital goods space, and we've been seeing a lot of shift that is taking place there. A lot of people want to know whether there is still enough and more merit, and whether the valuations within that space of a couple of stocks do look good. In fact, we could also answer a query that is coming in on L&T specifically, and whether that counter has room for entry now, and how is that looking? How does Larsen and Toubro look as a stock to be invested in?
Yeah, so when you look at the entire narrative of the Indian economy, it's been a growth story, and the growth story continues to hold promise when the last government has been reinstated. So it's going to continue. And when we're talking about growth, when we're talking about mega projects, and when we're talking about scale, that's where the company with large amount of expertise comes in. So that's why you're seeing that the capital goods space is buzzing, be it the industrial or be it the railways. You can see the ABB, Siemens, Cummins, L&T. So these are all some candidates which people should participate in, and I truly believe that the number does not matter. What matters is the kind of work which the company is doing, and the kind of money that is coming into those companies, and that really takes the moment. As if you see a HOL or a ABB or a Siemens, they had a sharp fall on the election day, but then what happened is that they have value, and they have been bought into by the biggies, and that's where the movement happens. So one should refrain from thinking that I got to buy a 2-digit stock, or I got to buy a low stock which is at lower levels. So my premise is that a stock which is at lower levels will take time to come up. So a stock which is already moving at a certain higher level, if there is a pullback in those stocks, those are the stocks to get into, because those are the ones which will move even higher. And that's what you are seeing over the last 10 days, that this is what has happened.
Right. Quite interesting. Actually, I'm also looking at a brokerage note on Nomura that has come on Axis Bank, and they have a buy call with a target of 1,250. But besides that, they are raising the issue of there is some management exits that have happened of late. Earlier this year, there was Ravi Narayan, the head of retail, who has left. In fact, just yesterday, there's a retail lending business head who has also resigned. Sumit Bali has also resigned. So they have taken up, and they are saying that they will continue to monitor these management changes, and they say that any impact on Axis in the medium term growth outlook will also be something to be watchful for. Raja, your quick view on Axis Bank. Yesterday and day before also, it was among those that did see some bit of selling pressure there. So how and what is really driving this for Axis Bank?
what I would continue to say is that the private banks are taking some time right now, and yes, there will be stories that emerge. But then finally, at the end of the day, I need to marry the story with my price action. And as long as I don't see any kind of signals emerging, I would not be advocating a buy in the private banks at the moment. But then yes, I am giving a thumbs up for the PSU.
Right, so your thumbs up is for the PSU. In fact, there's a query also coming in there. Virupakshi wants to know your view on Bank of Baroda from a long-term perspective and whether at the current price it makes sense to be looking at it.
Yeah, definitely. Like we have seen that the entire banking space has been a laggard. So I would continue to believe that if you are looking at investing into the banking space, then in terms of the ranking, it will be first SBI, then Canbank, then BOB. Bank of Baroda is going to take some time, but then I'm expecting a target towards 400 within the next 1 year.
Right, so you're keeping a target of 400 for Bank of Baroda, and you definitely look at SBI and Canbank above BOB at this point. So I hope that also answers Virupakshi's query. Well, let me thank Raja Venkatraman there for giving us a time, speaking, helping our viewers with their queries. But we're completely out of time, so I'm going to have to say a goodbye here from the entire team that puts this piece together. Thanks so much for watching. Do please post us your feedback in the comment section below, and also follow us in the link at the bottom of your screen for all your other updates. Stay tuned to moneycontrol.com as well as the Money Control app, and have a great weekend.